Rolf Winkler, who is a thoughtful journalist.
He gets good information too.
And it was well researched.
Yeah. He seems to get confidential information pretty good.
Yeah.
He got the Sequoia Scouts information dialed in too.
It's not that hard if you're a good investigative reporter.
Is it? I mean, getting somebody who has the LP returns to give up those documents? I mean,
there's enough sources of people who could. I mean, they legally probably shouldn't be.
Well, legally they're not allowed to. For sure they have a confidentiality in their agreement. But you would also not get invited to the next fund. So if it is leaked, who would leak
offline,
it?
I'll tell you 10 sources of how you can get it. I just don't want to discuss it on camera, but there are ways to get it. But let me say this. I thought it was, generally speaking, a fair piece.
Got it.
And Andreessen Horowitz certainly doesn't need my defense. They're smart enough, and they have a team of people who can write their own defense. I weighed in because I thought while it was smart and researched, I thought it slightly missed the mark. I thought its core premise was slightly off, and here's why. What matters about a venture fund, first and foremost, is whom do entrepreneurs want to raise capital from?
Got it.
And I seldom meet entrepreneurs who wouldn't die to work with Andreessen Horowitz, and that's just fact. Now,
they have a great brand. Ben has done great work. Mark has done great work. Chris Dixon has done great work. They've got good, smart people.
And on top of that, because they've invested in these services, entrepreneurs recognize they're getting a benefit from that.
Do they? Do entrepreneurs want those services?
Let me come to that in a moment, but I want to say first off, I rarely meet entrepreneurs who wouldn't want to work with Andreessen Horowitz.
Neither
now,
do I.
At the margin, people may choose Benchmark. Maybe you want to work with Bill Gurley.
Sure.
People may choose Sequoia. They're the best VC of the last 30 years.
Yep.
They may choose to work with Josh Ellman at Greylock, who's a great product guy.
Yep.
So there's a lot of choice out there, but Andreessen's always in the top consideration set.
Yeah,
so let's
5.
say that number one.
It's a 10.
Number two, I happen to know a lot of their LPs. I've never heard an LP complaining about Andreessen Horowitz. They seem pretty happy with the deals they're getting into and the returns so far. Number three, the hardest thing about private valuations is this notion that you know of called mark to market.
Define it for the audience.
So the way it works is we invest in companies. Let's say I put in $5 million.
Sure.
From day one, when I write the check, I have 1x investment. It hasn't increased in value.
Use the Maker example as an example to walk us through this.
So we wrote a check, $750K. It was at a $4.5 million valuation. The next money that came in, I think came in at like a $21 million valuation.
Okay. So you're 5x.
We're 5x on that first investment. Now we write a second check at $21 million. So then we have a blended ownership level, right? Some of it is at 5x. The new money we write is at 1x, right?
Just like the public share was at $5 and now it's at $21.
Exactly the same.
You can keep buying shares as it goes up.
Exactly the same. And the only difference between public and private is public, the price is adjusted, not just every day, but on a millisecond basis of a day. Through the trading hours of 9:30 to 4:30 Eastern time. Now, the difference for us is those prices don't adjust constantly. So how do you know when to adjust the price? Well, we typically will adjust it when someone else invests because that's an outsider setting the value of your company.
Got it.
When the companies become larger, sometimes you'll do what's called public comps. So you'll find comparables and you'll say, how are those companies valued? So if I have a company doing $250 million in sales, and let's say it's an e-commerce company, I'll say, well, how much are the public e-commerce trading for in terms of a multiple of revenue or gross margin or growth?
So if Amazon is public or Buy.com is public, you can say, hey, here's what Zappos before it was bought by Amazon might be worth.
And then we take a private market discount. So we actually apply a discount to it. But that's
to be conservative.
Yeah. And that's and there's also generally a discount for illiquidity. So
you can't sell the shares to somebody.
Right. And so what we do is, for the most part, the mark is your last round of finance. Sometimes when it's bigger, you'll look at public comps, but it's an imperfect science. And so my example is WhatsApp. WhatsApp sold for $19 billion, right? Approximately.
Yeah, I was in that fund.
And the day before a term sheet arrived, they were probably valuing it at $1 billion or $1.5 billion.
Sure.
Because it didn't have a huge amount of revenue that they could do a mark to market. They wouldn't have had a reason to increase the valuation. So you can see that someone's fund can dramatically change in one stroke.
For sure.
So my point is, Andreessen Horowitz in their portfolio might be sitting on 3 WhatsApps.
Right.
Or they might be sitting on 3 more Quirkies.
Right.
It's unknowable to an outside journalist to know. I mean, sometimes it's unknowable to you as a partnership.
It would be, in a way, unknowable because the price that a large company is willing to pay is very hard to determine.
Jet.com sold for $3 billion. It could have just as easily gone bankrupt. And I'm not saying it's on the verge of bankruptcy, but it wasn't guaranteed to even return 1x. If they had run out of money and no one was willing to continue financing that business,
right,
it would have gone to zero. So there's such binary outcomes. And that's all I was trying to point out. Entrepreneurs. So you asked me a question about services.
Yeah, let's talk about that. Because, I mean, just to recap, the piece seemed fair and accurately reported. Great. Entrepreneurs love the firm. I can confirm that. Like, who wouldn't want to have Ben Horowitz, or Mark Andreessen or Chris Dixon? These are smart cats. LPs, I can't confirm, but you can, that they like the firm. And I would think even for an LP, getting back 2 times your cash, even if their goal is 4 times, 2 times is better than losing money.
And when you invest as an LP, of course you care about current returns because that's the fund you're in. But you also care about, like, are these guys getting into the best deals? Because what happens as an LP is you put your money into a blind pool. And what that means is I'm giving you money. I have no idea what you're going to invest in, and I have no say in it.
Right.
So I'm handing you money, and I'm effectively investing in the future. So what I have to believe is that you have good judgment. You have partners who are hardworking and committed. And I have to believe that you're going to get into better deals than other people because people want to work with you. So you're betting on the future.
Right. And most LPs are not doing one fund and then waiting and seeing. They're going to invest in multiple funds.
If you commit to a fund, the saying is that you typically are committing to 3 funds.
Hey, everybody, I want to take a moment to tell you about retargeting. This is a very, very important thing for startups to understand because customer acquisition is what it's all about, and AdRoll is the best retargeting platform on the planet. Over 25,000 advertisers use it. And I want to tell you today about a new product they have. It's called SendRoll. No, it's not sending to get your rolls and buttered rolls. No, this is about email. And SendRoll lets you get all those people who are window shoppers, people who are checking out your website, and then you can convert them into buyers, which is what you want, getting them to sign up for your product or service by email. So imagine they visit your site, but then they get an email follow-up. SendRoll is powerful retargeting tech plus effective emails, and the results have been spectacular. The average SendRoll gets a 45 to 60% open rate and a 10 to 20% click-through. And I can tell you, running inside.com, that is probably 3 times, 4 times the industry average. And it's so easy to set up a SendRoll campaign. It just takes minutes. They give you all the templates, and they have a 24-hour, 7-day-a-week customer service line if you need help. And what I always like to do when we have somebody who has a product that's loved on our program, we don't want to read any sponsor messages, any partner messages for things that are not loved. The great part is a lot of my founders from my portfolio use AdRoll, so it's very easy for me to talk about their new product, SendRoll. James Heller, the founder of Rapify, which went through my incubator, says AdRoll is an integral part of our customer acquisition strategy. It allows us to continue to garner impressions long after the initial customer interaction. It's also one of the most cost-effective tools to bolster any integrated marketing strategy. AdRoll is the best retargeting platform, period. That's according to James Heller, good friend of mine and one of my investments at Rapify. So here's your call to action, everybody. Try SendRoll and get a $100 credit. Just go to adroll.com/twist, 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 and get that $100 credit. And please try that SendRoll and give them some feedback and let them know that Jason sent you. Okay, let's get back to this amazing program.